Hey, we're back again.
All right, cool. Welcome back. Back from Nashville. So got the dog in the background again.
All right.
Yeah, so PPI cooler than expected. CPI, I think, was like in line. So of course the market is having a massive rally. Treasuries are up. I guess everyone's figuring the Fed's gonna cut interest rates a ton. To me, I think the biggest news right now is Oracle's earnings. And, combined with what Jensen is predicting for CapEx, throw in the Oracle backlog, and you've kind of got, potentially a, 2.0 version of NVIDIA's earnings call, back in 2023 when everyone realized AI was here. Whether any of this will come to pass, who knows? Jensen's projections are just projections. And I do think if this stuff doesn't come to pass, then those of us who are old enough to remember March 2000, we may have a similar situation. But as long as this AI CapEx keeps churning, and now we've got potentially an accommodative Fed. I mean, we'll find out next week whether Powell wants to throw something hawkish in there. The most hated bull market of all time continues. Not much I can say here. At some point, I figure we got to have some sort of sell off, but haven't had it.
Right.
I always say whenever
any thoughts?
I always say whenever the market and or an equity makes a very seemingly impulsive move or a bigger move that's a little outside of expectations, it tends to give some back. So typically it's about a half back. So you get a big old 2-hour candle, like on an earnings call. It's very typical to give half back to some degree. I do kind of concern myself with Oracle possibly doing that, maybe settling around 280 briefly and then continuing the trend, or we get the other side of the answer. If CapEx starts to change direction a little bit, then yeah, we could see considerable pullbacks. But for now, yeah, everybody's a little bit, let's say, nervous about this market kind of continuing to melt up and tick up. But as we have been looking at this chart for the past month, where I was pointing out that range was contracting, we got the right side of the diamond pattern complete, and I was expecting a big move. Here it is. So
right, yeah, I mean,
the chart is still prevail in this, and everyone else is going to be nervous, and that's just how the market works. Sometimes you just gotta trade what you see.
Which is why I say you still always have your hedges in place.
Yes.
Right.
Have hedges that have very little, if any, cost to them. And then you don't have to be nervous. So.
Right. All right, guys. So we got Mayhem on from Markets and Mayhem on Twitter, and Traderade. It's kind of helpful trading thing on Discord. You guys should check out. You also said some things about Oracle. So why don't you start with that, sir? And then, I mean, Matt, I'm going to ask you this too. So whatever the numbers were was like 18 billion estimate. Then it went to 480 billion or whatever. What was kind of like the line people were expecting? I mean, they were expecting obviously 20 or 30. It wasn't like over 100, right? I mean, stock goes up, not just 40 points or whatever, 100 points, like a massive market cap. I mean, it's like an insane market cap move. So it's like 100 companies in one move. I don't know. Any thoughts on that?
Plenty of thoughts. I thought it was extraordinary. First, to see such a large move on the back of a double miss, with really just talking about backlogs being extraordinarily exponential. But we're not seeing that trend form yet. The double miss happened. So we're looking forward and saying, oh, but in the future, there's this enormous cloud-driven CapEx that's going to drive Oracle's cloud to the next level. Presumably some of this coming from OpenAI, who's diversifying away from Microsoft. We've heard deals happening there. But I do think it behooves us as investors and traders to be a little skeptical of that move. I say this as someone who's held Oracle in my forever portfolio for a long time. I was selling 350 calls yesterday. The premium was too juicy to ignore. And for me, when you see moves like this where vol is really elevated and the actual move is pretty frothy, and even our vol or relative volume yesterday was extraordinary, it just felt a little bit extreme, that it could give some back, that I'd be able to keep a lot of that premium, if not all of it. So for me, I get a little bit cautious when I see stuff like that, because it feels like it was driven more by FOMO than fundamentals. And I know that FOMO is one of the leading drivers of price discovery right now. But when a company goes from being basically a $600 billion company to a $900 billion company in a very short period of time on a double miss and just optimistic forward guidance, that gets me a little concerned. Because the guidance is built on what? It's built on the idea that generative AI is just going to infinitely consume data center resources around the world. And yet, what have we seen over this year? We've seen that we're entering a different era with generative AI. It's an era of efficiency. You can do a lot more with a lot less hardware, meaning a lot less data center utilization, power utilization, and so forth. You're seeing smaller models become more powerful, training workloads become more efficient, and inference workloads become more efficient. You're also seeing signs from that MIT study, for example. 95% of enterprises that have adopted generative AI have nothing to show for it. So there is, based on the latest census data, a pullback in the investment in generative AI at the enterprise level. So to me, I'm a little more cautious on a move like this. I'm happy as a long-term investor in Oracle, but I'm also cautious enough that I want to sell some calls on it, sort of as a way for me to hedge the extraordinary magnitude of that move.
You talked me into it. That beat you heard, I sold some 350s too.
I heard the order go through.
So, thank you.
Nice work, man.
Great minds think alike, they say.
I love it.
Yeah,
If
no,
you look at the
I didn't get a
options-
chance. Oh yeah. I mean, I got a really nice premium. So,
and that's
Right.
the moment you said look at the options, yeah, I took a look. I didn't get a chance to trade it yesterday because I was on a plane. So, and then I was busy all morning cleaning up from all the stuff I missed when I was on a plane. So this is my first chance looking at it. You said that, I was like, holy crap, he's right.
Right. Holy smokes.
There we go.
So anything else on this one?
Well, if you look at the options channel, Oracle, what fed my thinking into that is 350 is the call wall. So that's often an area of implied resistance. We couldn't crack it yesterday. We're rolling over a little bit today. So that was the other thing that kind of fed into that thinking, just seeing that area of concentrated gamma exposure overhead. But zooming out more broadly, I 100% agree with what Matt's saying about the CapEx story, because that's really the big driver here. If we net out the planned AI CapEx, we would see an economy that's rolling over. Things have become really concentrated in these large companies and their plans to spend. We had Mark Zuckerberg at dinner with Trump, and he said, oh, we're planning to spend something like $600 billion by 2028. And then later he was caught on hot mic saying, I didn't really know what you wanted me to say. So some of this is a little illusory in the sense that we're just kind of making it up as we go. Meta is a company that stopped producing open source models because their open source models were lagging those of China. And then they went on a super AI hiring spree, paying people tens of millions to join the company, and then abruptly halted that and then partnered with Midjourney for their image generation, saying they can't really do this in-house. So there are some signs that these large companies with hundreds of billions of dollars of investment aren't really getting what they paid for. And I've got plenty more to draw from that well.
I'm going to ask you guys an off-the-cuff question here, which I just thought of, right? So Larry Ellison's kid owns Skydance, Paramount for $1 billion or whatever. I mean, Larry could buy 500 Skydance Paramounts. Does that tell you anything? Or is that just part of the same argument? I mean, or does that tell you media's going nowhere and deliveries everything like Netflix or whatever? Does this mean anything?
I think it means
tells
something.
you he's got a lot of money.
Bottom line, yes.
No shit. All right. So anything on your end, Mayhem? Or I probably too vague of a question.
Well,
I'm sorry. It's just a lot.
Yeah. Oh, go ahead.
14 Americans have more combined wealth than the bottom 50% combined. And most of those are tech moguls. So make of that what you will. But the upward redistribution of wealth that's happened there, maybe it's getting a little bit ahead of itself, unless really generative AI is the next paradigm of the fourth industrial revolution. I'm a little skeptical I think it's made a lot of progress. I use it all the time, but I also see the pitfalls, and we still haven't gotten ahead of things like hallucination, for example. If you're relying on this stuff to write copy or to do data analysis or to create code, and it doesn't understand what the input is, and therefore, by definition, can't understand what it's outputting to you, then it's just an intelligent token prediction engine. Have they come farther and reduced hallucination rates and increased the accuracy of outputs? For sure. Are we at a point where enterprises can uniformly trust generative AI for any job function? No, we're not there yet.
Right.
Agreed.
Yeah. So you also said this about AI and jobs a little bit, right? You talk about that, don't you? And like, so what is your thought on that?
I think that AI is a force multiplier. I don't think it's a job replacement tool yet. Now, will we get there in the future with subsequent iterations of this technology as it improves? Yes, I think with some degree of certainty we will. But the biggest pitfall that I see is we're trying to replicate things that the human brain does without examining how the human brain does it. So we're doing it in this sort of black box. And if you think of AI, the way it exists now, these transformer LLMs, what they are is essentially a giant database of inferred relationships between text and other data sets, phrases, words, etc. It's essentially just a prediction engine. And the problem with that is that it doesn't really understand what information it's processing. So by definition, it can't really give us the quality of output that we would expect. And I've seen this in every single model I've tested. And I've tested hundreds of models over the last 3 years. And again, they're getting better, but I don't think the revolution as advertised is quite here yet. It's that Gartner peak of inflated expectations curve where everyone thinks we're already at the paradigm. And yet the real generational shift is likely years away.
Right. Yeah. Huh.
I was just kind of having similar thoughts to quantum computing. It was just recently announced that quantum superposition has been achieved, which is huge. The stuff where you've got to reduce temperatures on processors in a quantum computer down to near absolute zero to get them to function just for long enough before they heat up and start to corrupt data. This is kind of something that's on the horizon where if we can achieve a reasonable way to have superposition possible in the processors for quantum computing, wouldn't need to put it near absolute zero because superposition exists in both places at the same time. So that's something that kind of can accelerate that, and where most people we've talked to even on this podcast within a year would speculate that quantum computing would be years and years and years out. That got a lot closer the moment they announced that superposition is now possible and achieved.
Yeah.
So,
all right.
Similar situation. It's just let it happen. And it's exponentially getting faster and faster and faster as we speak. So, same with AI.
Mayhem, do you ever look at nano chips? Do you ever look at nano chips?
I do not. I have not looked at nano chips.
Okay, so Matt talked about nano chips on a report he did this week, which I thought was interesting. So, like, he said the beneficiaries would be like Intel, Taiwan Semi, Micron. Do you talk about anything in that sector at all?
Yeah,
I mean, is it part of this whole theme? Like, we don't really need it. Is that kind of what you're saying, or maybe just?
I think we need Micron. I think Micron finally figured out fast memory. H.E.A.T or SK Hynix had completely dominated this space for a while, making it one of the biggest memory producers in the world. But now we see others that are able to produce DDR7. This is going into a lot of the AI training and inference stuff, as well as video cards for gaming. So I think that puts them in the playing field. Now, I can't say I'm super familiar with the nano chip side of things, but just to go back for a second on quantum, I think we're seeing technology, the underlying hardware accelerate. We're seeing the same with AI. You can do more with less. We're seeing speeds improve. The question is of the software layer we put on top of all this.
Right.
Is it going to give us the results we desire? And I think that's what we have to decide whether or not the thesis is valid for a lot of these sort of trends is, are we able to create constructive use cases that enterprises can use at scale with what we have now or can expect 6 to 12 months forward?
Right. And so, like, what are your names then, man? Like, what give you your best names in the groups?
So I don't have that right in front of me, but what I will say is that I think that we need to have a bit of a consolidation or pullback period to get more attractive. I like AMD a lot as an underdog play.
Yep.
So I will put that out, that I think AMD's inference and training technology, their MI series of GPUs, are extraordinarily capable. In fact, they're generally faster for less money than NVIDIA. The big difference is the CUDA software stack. NVIDIA has a much more sophisticated software stack for building tools to use their hardware than AI does with ROCm. So we have third-party open source stacks like Vulkan and OpenCL that people are using. But at the end of the day, the trade-off with AMD is if you buy their hardware, you've got to do a lot more legwork on the software side to make up for it. But I think that gap is going to start closing, and that's going to put some margin pressure on NVIDIA, but it's also going to open up data center sale growth for AMD. And we can't forget, AMD has a legacy of going from underdog to sector leader. Look at what they did to Intel over the last decade. In fact, it goes back longer than that. AMD invented the 64-bit instruction set that every single Intel and AMD processor used to this day. Intel tried and failed. And so AMD now dominates the data center space. They're dominating in PC, where their market share is really growing. They're growing in mobile. I think we could see a similar play come out over time in the GPU space. That doesn't mean NVIDIA is not going to be the leader, but I do think AMD can gobble up a lot more market share in the years ahead. So that's one to take a look at. And it's performed well. It's been one of the trades that we've had on for a good chunk of this year because it was mispriced. And while I'm not a huge fan of management's, sort of M&A spree that they did over the last several years, I think they bought a lot of things they shouldn't have. I think over time, they're going to get back to their core. That's what I'm seeing from Lisa Su, that they're more focused on their core moving forward. So that would be one that I'd keep an eye on. You guys probably already know I've been long Palantir for a very long time. Cost basis is $7. I wouldn't buy it here, but if it had a meaningful pullback in the context of a much larger bear in the space, I think it would be appetizing because they're not generative AI. They're ontological AI, and their AI actually works for use cases. They're one of the first companies to monetize AI for constructive use cases at scale, and that's playing out in this extraordinary commercial growth they're seeing.
100% agreed. And
so what tell us a little bit more about Traderade and what you guys do.
Sure. So Traderade, the goal of what we do is to try to help traders of all skill levels improve their consistency, sharpen their edge. We know trading is a difficult business. Most people that endeavor to become traders come in with unrealistic expectations, blow up their accounts, turn around, and never do it again. My goal is to try to help people avoid that outcome. Trying to help people learn more about risk management, execution, where there are opportunities, and then trying to guide that process constructively so that people have more realistic expectations, better risk management, and tools to use to identify opportunities that they can potentially profit from. So we're both educational, but also we have a pretty strong foundation of cutting edge tools that we've built. For example, we have a visualizer for the S&P 500, which is the largest options market in the world. It trades about $1.3 trillion of notional every day. And about 60% of that now is in zero DTEs, believe it or not. And about 80% of that is in options that expired in 7 days or less. And so we have a tool called the SPX Options Visualizer that looks at all of the flow that is most standing out from all the contracts being traded, as well as the key levels. And I tell you, we've pretty much put together what we call, jokingly, the Church of the Hot Call. And the reason we call it that is because when that most active call strike really dominates the flow on the stack, price almost always is magnetically drawn there. So that's helped our community build an edge. And so we've taken that tool set and built it out for the NASDAQ, both the index and the triple Q, for the SPY, and for a number of optionable stocks on CBOE. And our whole focus is just trying to help folks avoid those nasty pitfalls of trading, improve their mindset, and give them the tools that they need to succeed.
Very cool.
So, all right. So hold on. So let's go back because you said some really, really interesting stuff. So on your tool, so like right now, SPY is 656 and change. What you're saying is, if I was going to use the word skew, but I won't use the word skew. If you're looking at all of those short dated calls and a ton of them are at 655, you're saying SPY will be dragged inevitably towards 655. Am I understanding that right?
Yes, and I focus a little bit more on SPX than SPY, but yes, in fact, right now, if I was able to share my screen, I could show you we're trading at the hot call on SPY right now.
I think you can share your screen.
Yeah, you should be
All
able
right,
to.
give me a second. Let me see.
I mean, if you can figure it out.
Oh yeah, I can. I just
Oh,
want to
yeah.
make sure it was okay with you guys.
Yeah,
But
you know.
here,
Absolutely.
give me 1 second.
Yeah.
As long as it's decent.
Yeah. As long as there's nothing nothing weird on there.
Yeah.
Like Pat's not.
It's gonna look really weird, but not in a bad way.
I sent
can
Matt a
promise you
picture
that.
of my shoes last night. I don't think he was very appreciative of that.
No.
No, it was creepy.
I
So
got
here
these
we
new
go.
shoes, man. They're so dope. He didn't like them.
We've got this on screen.
Well,
This is the SPY options visualizer. You can see right now we're trading right to the hot call where there's 226,000 contracts traded. It's also the key to positive gamma level. That means it's one of the most active levels where calls existed before the trading day started. So we can see there was interest in this level before the day started. That interest continued, and we were magnetically drawn to that same level.
That's really cool.
And we can show it in a slightly different way if we look at the
So do you
pivot
guys have
chart here.
execution capabilities right off the screen here or anything like that? Does that stuff work?
No, we don't have execution capabilities off the screen, but basically what these are live streams that people are able to see. We have 13 of them, and they cover pretty much everything that's going on that we want to watch. Bitcoin, the S&P 500, gold, NASDAQ, and we're looking at the ETFs for SPY and Triple Q as well. So this helps because we've got dynamic pivot levels. These are generated by volume price action in my algorithm. We've got a couple of other indicators like our bullish, bearish, fair value gap indicators. And then, of course, we've got our options levels that help to guide where price may be going. So for SPX or for ES here, we've already also pinged the hot call implied level. So this is the hot call level on SPX translated to ES terms. The deltas are recalculated in near time to ensure accuracy, and the information is updated minutely. So you're able to really, I think, harvest a bit of an edge. Obviously, talking my book a little bit here, but I trade this when I see opportunities, and it's helped to keep me honest. It's helped to improve my consistency and take some of the emotion out. Like I might come in and say, boy, I really don't like that data point. I don't like the narrative in the market, but look at what the calls are doing. I can't ignore that. I got to go be a parishioner at the Church of the Hot Call and just play this.
That's pretty awesome.
Parishioner at the Church of the Hot Call. I like that. What do
We'll have to quote that.
Yeah, you're more than welcome to.
So you talked about risk management, which
yes,
I think may very well be the most important thing because, intermediate term, long term markets go up. So really, at the end of the day, all you have to do is avoid blowing yourself up. And just by default, you're going to make money. And I do find, I'm in a bunch of Discords, I watch Twitter, and, and I believe we are in now a thematic market, which means there are amazing opportunities, but, also very heightened risk. And I see a lot of times people are either, putting all of their money into, something like an Oracle after it's gone up, 40%, or they ride something up and then they just ride it all the way back down. So, what are some of the risk management things you're teaching people?
First and foremost, you shouldn't have so much on that you can't sleep at night. Because if you do, you have too much on. That seems very simple, but honestly, that's something that I have to continually teach people. And my own mantra is I don't want to put more than 1% of my total portfolio liquidity in my trading account at risk in any single position. So I encourage sizing positions by relative volatility. You can calculate that by using RV, IV. You can look at average true range, whatever people prefer. But at the end of the day, your stop should be calculated based on the overall expectation of volatility, as should your position size. And if you're doing that, especially with the 1% risk, you're always going to be able to come back. My key mantra is you have to treat trading like a business. You shouldn't dress it up to be sexy. It's not your lottery ticket to retire tomorrow. If you treat it that way and you get lucky enough to make money, you're going to lose it because you don't appreciate the core concepts of managing that risk so you can keep that business open for the next day, week, month, or year. So the goal is coming in and looking at it very much like a business. We're buying and selling inventory. We don't need to dress it up as something it's not. And that means all we're trying to do is consistently capture a positive spread. We leave all the ego flexing of calling bottoms and tops behind because that doesn't matter. That doesn't make us money consistently. What makes us money consistently is capturing as much of the move as we can when the risk to reward ratio is in our favor. So looking at momentum as a key way to manage risk is also important because one of the things that does is it takes some of the emotion and the guesswork and the discretionary trading out, and it allows us to start building a more systematized approach based on how we qualify momentum for different instruments. Adding to that, it's important to understand that everything we trade has a different personality. If you try to trade gold like you trade the S&P, you're not going to have a good time. So learning about the distinct personalities of those instruments and their ability to move is important. So for example, if I'm trading a single stock, my size is going to be much smaller than if I'm trading the S&P 500 because a single stock technically can get zeroed out overnight. That's not going to happen to the US stock market writ large. So that also affects my mindset and how I try to imbue the idea of risk management to folks. You have to always look at your risk first if you want to capture that reward over the long run.
Right.
Yeah. Good advice.
So
And
you're
then,
using stops too?
Oh, absolutely. Everything has to have a stop, whether it's a trail stop or a hard stop. It has to ultimately be a market stop. I know some folks like using limit stops. The problem is you may not get your stop realized if something just gaps right over your or under your stop. So stops with everything is a key risk management tool. And I know some people like to say my broker, the market makers are watching our levels and yada, yada. That usually just means your stops are in the wrong place. If your stops are consistently being triggered, then you have too much size and you're not comprehending the underlying volatility of the instrument that you're trading.
Absolutely.
Right.
Are you using then charts to decide where to place your stops?
Yes, and not just technical analysis, but also options positioning. Just like I talked about where I was selling calls on Oracle, looking at that 350 call wall, I'm also looking at options positioning to really to realize both where my reward and risk levels may be.
Talk about that for a second. So you mentioned call wall. What do you mean by that, and why is that important?
Sure. So let me see if I can just get into this room here, and I'll show you what I'm talking about.
All right.
All right, so I'm going to pull up a chart for Oracle here, and I'm sharing it on my screen.
Yep.
And this chart shows you the put wall right here where most
We don't see it
exposure-
yet, I don't think. Do we?
Oh,
Not yet.
Yeah, we don't see it.
okay, give me a second. Give me a second. Maybe it put it into a different window here. Okay, here we go.
There we go.
All right, now we
So
see it.
here is the gamma exposure profile for Oracle. And the call wall is the largest area of call exposure above spot. So we can see that's pretty clearly defined at 350. That is what inspired me to want to sell some of those 350 calls. And believe it or not, it was a little bit more pronounced yesterday when all the excitement was happening and everyone thought, well, surely it has to go to 400 if it's gone this high. But, we saw signs of exhaustion there. On the other side of it, this is where if one was shorting that move, you'd want to be a little cautious because if we hold this put wall at 320, likely is that we kind of trade in this range. Right? That's where a lot of the downside hedges and downward directional bets in Oracle are concentrated. Now, if we slip below that and we see exposure continue to roll lower, that suggests that this move has legs lower and it could continue to move. So I do like to look at both the technicals to qualify momentum. EMA 21 on a daily and weekly is one of my favorite moving averages to look at, but I also like to look at gamma exposure and relative volume to get a sense as to where people are looking at levels and what level of excitement exists in the underlying equity.
Right.
Good stuff.
And is that I can't see anymore because I'm too old. I think that says Traderade on the bottom. So this call wall, put wall is something that you guys produce. It's not like a Bloomberg thing or.
Nope. It's all from my friendly little bot that I wrote named Gur. And it goes through the CBOE data set, examines all of the options on the chain, produces these little charts. And the next step is actually a text-based output that resembles what you saw for SPY and for the S&P 500 futures, where it also just labels those levels on the chart for you. So this is all stuff that I've been building over the last several years. It started off for my own trading, but then people were like, wow, these charts are so cool. So I started building it for my community as well. And now you can just run a simple query where you type in ! gamma and the stock symbol you want to see, and it produces one of these charts based on the current data.
Wow.
Cool.
Huh.
Very cool stuff, man. Kind of after my own heart.
So, it's funny. Speaking of being after Jay's heart, you also talk about like the wheel strategy, right? Yeah. A little bit, at least you do. Any thoughts on that one?
Yeah, actually, I love the options wheel strategy. I think that's how I manage my Palantir position, for example. And now I'm getting more into it with Oracle with this juicy vol. But basically, the idea of if you have something you really want to hold over the long term, but you think risks are getting ahead of themselves, you can start selling some calls into elevated vol. You want to look at the options chain, see where that exists. Different strikes and also different expiration dates may give you some ability to exploit elevated volatility. On the other side of it, let's say some of those shares get called out of your portfolio, but you still want to keep the allocation. I'm more than happy to sell some puts at lower strikes where there's some juicy vol. And then, eventually I'll probably get those shares put back into my portfolio. And along the way, I'm harvesting premium. So for me, it works really well. It's added an additional income stream to my portfolio. Is it perfect? No. You can always have episodes where things get a little more carried away than you expect. But net, it has been a liquidity building tool for me and also a risk management tool.
Agreed. I mean, I've had some pretty wild moves on TNA with the same situation, but I always weigh it against my cost basis. So like any income I generate selling premium offsets my cost basis overall. So I'll keep track of it in a journal that way.
100%.
And we're about to file for a wheel strategy ETF. So that'll be fun. So yeah, we're fans of that here.
It's never awesome. It's never been dull, that's for sure. It will be fun. You are absolutely right.
Oh yeah.
Right. Oh yeah.
Especially in this market where everything is driven by options more than it ever has been. It's extraordinarily helpful to look at the chain and factor that into our trading, but also to use it to potentially generate income and, like you said, reduce one's cost basis on things we want to hold.
Right.
So I have one to mention, and I want to kind of test your screen there. If you want to get your screen back up for something.
Let's see it.
Sure, go ahead.
Check out OPEN. And
okay. I'm the talk of the town.
I've been wheel trading that for years now.
Wow.
And in early July, I loaded up at 84 cents a share on top of my existing wheel position. And I'm just like, well, I'm looking to take some profit off here, but I've got to be adamant about, selling the right strike. So if you're looking, I'm looking at like the 1150s are pretty good, but that's kind of above where you're seeing the 10s there. In a situation where you got something going that exponentially high, you got to kind of figure out what to do. So I wonder if this is a good test for this.
So what does this tell? So Mayhem, what does this tell you that he should do? Like he should be selling the 11s or something?
So right now what we see is that the call wall is at 10 on open. We're challenging that today with this extraordinary 66% rise. What I would be doing is looking for how do we close out today? Do we close above 10 and see positions roll higher? If we do, we might get some juicier vol to sell against at those higher strikes. But if I was inclined to have to sell into today, I'd be eyeing the 12 and the 13.
I see.
And I'd look at the term structure of the options chain to see where that volatility is most elevated on those 12s and 13s so that you could take advantage of that as well.
Agreed. And some of those are selling, I think, at a little over $1 right now. So nice,
juicy.
Nice premium. Yeah. for what I paid for it. Yeah, that's hella juicy.
That's a great trade. The other thing that I would also do is look at skew and see which side it favors. I'm sure on open, it's probably more tilted towards calls, but if you can qualify it as being extraordinarily high skew, one of the things that I do to qualify my call sales is look for that skew blown out to the call side, suggesting that vol is at a premium and could be worth selling.
Good point.
Right. Huh.
I'm gonna get right on that. Good stuff, man.
All right. So you also talk about
me and Jeremy are going to make a lot of money off this.
Yeah, no
I'm
kidding,
already
right?
up $35 on my Oracle.
$19.99 on Discord, right? Something
Nice.
like that.
Right.
Yeah.
That just paid for it.
Yeah, you know what I mean?
Ooh, now $45 on my Oracle. This is awesome.
All right. So switching up, what is an Ichimoku cloud? Jeremy knows. I have no clue.
Oh man.
So this was a form of technical analysis that was invented by a Japanese journalist who really followed commodity markets, particularly rice, to qualify momentum. And so basically the very simple way of looking at the cloud without getting into all the sort of underlying framework is above the cloud, you're in positive momentum. In the cloud, neutral momentum. Below the cloud, you're in negative momentum for whatever time frame you're rendering the cloud on. Now, for me, I don't really use it intraday, but I do like to look at it on the daily, weekly, and monthly time frames.
Right. I just wanted to say it.
It's fun to say.
I learned it just to teach it.
What about back testing? Like Matt talks about this a lot. How does a regular person like back test?
There are all kinds of platforms to be able to do that on. I believe FinViz has backtesting, TrendSpider has backtesting. I think even TradingView has some degree of backtesting. There's also a lot of Python libraries that are available to do that. We're seeing some brokers even start to build some of these tools in. But for me, I like to backtest using a Python framework that I've built to model out about the last basically 3 to 5 years. I try to be regime specific with backtesting. I think this is the biggest nugget to take away. If you're backtesting outcomes in a bull market, you don't want to be including large bear market periods in your backtest data set, or you could skew your data errantly. So for me, I like to backtest specific to the regime I'm in and what outcomes I might expect.
Right. Okay.
And then you want to use simple strategies. Like, for example, one really easy strategy that works for Bitcoin and gold is Bollinger Band squeeze and expansion. And you can backtest this. I like to look at the 50-week Bollinger Band with a 2.1 standard deviation. But basically, when you see that squeeze breakout in either one of those instruments, that tends to lead to a significant continuation of positive momentum. And you can see that in gold. It's been going on for what? Almost 2 years now, a Bollinger Band squeeze that led to one of the most prolific breakouts we've seen in the metal. And these are the Bollinger Band squeeze breakout backtest is great for things where you don't have a sort of macro overlay or the same sort of fundamental drivers. It's much more driven by momentum and psychology, because what you're really seeing with that is the expansion of volatility driving that momentum. So that's probably one of the easiest ones to qualify, but you can look at things like moving average crosses or other things like that in backtesting data sets to create, indicators to get long, to get out of a trade, et cetera, when momentum is fading.
Got it. Okay.
Explain what a Bollinger Band squeeze is.
Sure. A Bollinger Band squeeze breakout. That's a great question. So basically, we all know as traders, when something's consolidating, it's typically kind of like a coiled spring. It's starting to capture some energy that it's going to directionally release later. The longer it consolidates, the greater the potential for the resolution of that directional move. So a Bollinger Band squeeze is that consolidation period. You see the bands narrow because the bands are an expression of the inherent volatility of the instrument. And as it squeezes, you get a sense as to what a breakout would look like. The breakout is when the bands start expanding and they continue to expand with the price of the instrument giving you a very significant directional clue. For example, with gold, it was breaking above the 50-week moving average in a Bollinger Band expansion with price hugging the upper band. Now, I want to say this with a caveat. A lot of people look at Bollinger Bands as support and resistance. That's fine if you're in a consolidation period. It does not work at all when you're in a breakout. In fact, it's the opposite. Often is the case in a Bollinger Band breakout, price is going to, if it's a positive momentum breakout, it's going to hug that upper band or even get above it. And, that traditional mantra of, support resistance would have you want to sell into that. No, in a breakout, you actually want to continue building your position into that exact type of extraordinary momentum.
Wow. All right.
We actually, we had Tom Basso on earlier in the week.
That's what he was saying.
So, Bollinger Band breakouts are something he uses as well in his methodology, what I don't trade systematically anymore just because I don't have time. But one of the things I used to like to do is combine counter trend methodologies with trend following. So, that way, when you're in a trending market, yeah, your counter trend methodology is getting you out and getting you out early, but your trend methodology is keeping you in. And, I found that worked very well to kind of smooth things out and keep you sane when you're in periods where counter trend does not work. I personally psychologically favor counter trend, but you get in a period where counter trend isn't working, either upside or downside. It is definitely painful.
Indeed.
A while back, I put out a video explaining a strategy I built where I used Bollinger Bands and a fib speed pitch fan to plot price targets within breakout trades. And it was funny because I put a link out to my Twitter channel on it, and I tagged John Bollinger in it, and he actually gave me a nod of approval. He liked it and commented on it, so kudos. But it's neat to be able to pick out price targets using some other method, whether it's price action itself, or you can use moving averages, or you can use the basic measured move. But with a pitch fan, it gives you very, very clean accuracy across all time frames. So like you can do it on a very short time frame chart or a very long time frame chart. Combined with Bollinger Bands, it gives you all the targets, all the points you are going to be interested in.
Right. All right.
Like
Jeremy, if you post something, Mayhem and I will like it next time, just so you know. We'll make sure we do.
Heck yeah, I'll post. I'll actually post a link to that video today.
Matt will too.
So we can say Mayhem liked it. I think the saying, you're not going to tell people Pat liked it.
Yeah, right.
So, Matt, we can have something.
Mayhem's got a few more followers.
Maybe, yeah.
I have like negative followers. All right, so
for good reason, though.
Are you sharing shoe pics on your feet? Is that what's happening?
Yeah, exactly. Those are nice shoes, though, by the way, bro. So,
but
there was no context. There was no context. I apologize. There's no context.
Sent me a picture of your legs at like 10 p.m. last night. I'm like, what is
Dude,
this?
I just was like 20 for 25 from like 25 feet off the Pro 3, and I'm 60 years old. I was just really proud of myself. That's all I can say.
Sometimes if you do something out of the ordinary.
And off one leg too, by the way. Like have like no knee, basically. All right. So Matt talks about hedges, right?
When somebody's covering you.
Let's see hedges. We talk about hedges. I'm sorry, I lost my train of thought. You talk about short selling. Did you do that? And what would you sell, or how do you sell, or why do you sell, or all that?
Oh, sure. A couple of things I'll add to contextualize. So first, for hedges, oftentimes I love pair trades, and it really depends on the regime we're in. But one of the pair trades I like right now is long SPHD. That's the S&P 500 large cap high dividend ETF, and short SPHB. That's the S&P 500 large cap high beta ETF. And what I'm seeing is that the ratio chart is basing and suggesting that perhaps those high dividend payers could get a stronger bid than the high beta stocks. And part of that has to do with a slowing economy. Part of that has to do with the rate cuts we're seeing. And part of that has to do with how far the high beta stocks have run in comparison to the high dividend stocks. So for me, that's a hedge. If you plot that against the VIX, this is where it gets really interesting. They basically mirror each other. So you can get exposure to the idea of expanding volatility without the complexity of putting on that trade. And the way I manage it is every Friday, I'll rebalance the size of both sides of that trade to be cash even. So I'm able to keep that trade on. But that's one of the hedges I love in an environment like this, to keep me honest, because I can also watch it. And if it starts to really rally, that gives me a sense that risk-off regime is around the corner. Now, in terms of short selling, for me, it's really looking at a combination of factors. I do always look at the macro overlay. for the big picture to understand where the long-term trends are forming. I also like to look at fundamentals and momentum. And when all three agree that this company is in deep trouble, it's got further downside, we see momentum shifting and suggesting that, that's one of the base cases that I have for a short, whether it's in an equity or a futures contract or, expressed by options or otherwise, or even in currency. You can see the same play out there as well.
Got it. Do you use the VIX?
So, but let's.
Oh.
Yeah, I use the VIX. I don't love it, but I watch it. I think that it's lost some of the utility. I think it's more useful. It's been more useful over the past several years to just aggressively sell vol into vol spikes than anything else. Like the VIX has just been a way to pay yourself when people are, irrationally fearful of the market.
Right.
I used to use that. In comparison, I would trade SPY, but I would keep an eye on UVXY so I can kind of confirm my position before I even hit the trade button. Works really well.
But what were we going to say, man?
Yeah, let's put the hedging in some context. So, how the people that you typically have on your site, are they shorter term traders? Are they buying and holding for long periods? Is it a mix?
I would say it's a mix, and I encourage that because I don't think that anyone should be taking all their portfolio liquidity and day trading it or swing trading it. So my methodology that I encourage others to follow is have a separate day trading account, a separate swing trading account if so inclined, and then roll your profits from both of those accounts into your long-term investing account and invest. And I really encourage people to set caps on those accounts so they are honest with themselves about rolling those profits forward. But yeah, we have multi-time frame traders and investors. And for me, having done this for 20 years, that's one of the keys to building wealth over time, is having the discipline not to let your account get too big so that you're putting too much at risk. Now, obviously, there's the 1% rule, but if your account tenfolds over time, you're taking a lot more risk with that 1%. So that's why I really feel like you've got to harness the magic of long-term compounding. And that doesn't mean just investing in stocks. You can invest in real estate. You can invest in businesses. There's all kinds of opportunities. But I always tell people, because conditions can change, you may not always have a hot hand. You need to have those longer-term investments in place. Right. And if you're older, you need to have fixed income as a bigger part of that portfolio.
Agreed.
And that's why I talk about hedges. Because I'm at a point in, age, time, all of that, I can't be sitting around trading. So, and I'll move, my beta up and down a bit, but I'm always going to be long. And I've seen a lot. And, I don't sleep at night always being long. So I'm a big believer you should always have some hedges on. You can ramp the hedges up and down, which I talk about a lot, akin to cards where, when the odds are in your favor in blackjack, you double down. And when they're not, you're not betting aggressively. And, I think you can do that to an extent with the market, and sounds like you've got some really good tools for something like that as well. We can agree to disagree about fixed income. I've got my own my own feelings about fixed income, but that'll be for another time.
Right.
I mean, right now for me, just what I would ordinarily have as a cash allocation just sits in bills, because for me, there's really not much downside risk. The yields are good.
Right.
I don't like going out on the yield curve.
Agree.
Yeah.
I don't like going out on the yield curve because to me, I don't want to lend the U.S. government money for 10 years. No. I don't believe that the current rates pay me enough for the risk.
Agreed.
My portfolio is about 85% T-bills, so we're in agreement there. But then the other money is in options. I mean, I'm not buying individual stocks hardly ever.
Sometimes strategies can be used as a hedge too. So, like for instance, on some of my wheels, when I'm feeling like things might be a little threatened on the chart, sometimes I'll flip them into brief collar strategies just to kind of act as a hedge in case things start to take a turn. So that has done very well for me over time. But an agreement with being able to have an actual hedge in there would be probably a better idea in most cases.
Also, for option strategy, when I'm employing an option strategy to say get long or get short, I'm almost always using some kind of spread. Vertical, horizontal, diagonal, but I want to make sure that I reduce the debit and that I also have some flexibility in my time frame in case I'm wrong about the outcome or its timing.
Absolutely. Yeah. Same.
I got a question for you. Do you guys have I haven't asked this one in a long time. It's funny. These guys use the term widow maker. Do you guys have a widow maker on your platform? Oh my God, these guys are doing this. Or I think for Matt and Jeremy, it's UHG, right? The gas
UNG
or something. UNG.
You're not here, Pat?
What?
I think that this year's Widowmaker was copper.
Yeah.
My God. I've never seen it trade like that. It's usually so boring. And yet with the tariff on, tariff off dance that we're doing, it's like the hokey pokey, basically. Copper was just moving around so erratically. So I think we have to actually give, and usually it is Natty for us, that Natty is the Widowmaker because of how it moves. Yeah. We have to hand that crown over to Copper this year. Dr. Copper on life support.
Great. I was going to say that's what they call it down in Australia.
I usually do. Yeah, I usually do pretty good in FCX. I don't know what I've done on it this year, but historically, FCX and Alcoa have been pretty kind to me.
They're great trading vehicles too. They're very liquid.
And then, and then there's MP.
I don't think I do as well on MP.
Right.
It's great for trading.
Yeah.
That's more or less the picture there. But I did have a little thing to add about the whole onshoring thing. I mean, we've got to deal with onshoring all our rare earth metals and stuff too. But I had a little inquiry with AI on Intel Corp and their ability to be able to onshore a little more efficiently than, say, NVIDIA. Any kind of thoughts on that besides what AI is saying?
Yeah, I mean, NVIDIA is a fabless company, so they're entirely reliant on Taiwan Semi, and there's no other company out there that has fabs that can produce 2-nanometer chips. So I don't see NVIDIA really being able to onshore easily because it would be either relying on their partner, which has expressed some interest in doing that, but also said that really it's not going to be able to produce the same degree of sophistication and scale that they can in Taiwan. Or NVIDIA would have to spin up their own fabs, which they have literally no experience doing. Maybe they could do that by buying a company like Global Foundries, but admittedly, their tech is a lot more primitive than Taiwan Semi. So Intel has some fab experience. Whether they keep that online is a whole other question altogether. Management had been talking about selling that off or spinning it out or otherwise, but certainly this is a company that at least has more experience fabricating chips than NVIDIA, which really literally has none at all.
Right. So don't sleep on Intel.
I mean, I think that it's an interesting story. I will say that Intel has been a company where management has systematically screwed up for 15, 20 years, missing every potential opportunity. Mobile computing, particularly tablets and phones, solid state storage, memory, graphics, and GPUs. These were all core areas where they should have excelled and they should have become a more multifaceted company rather than just ceding CPU market share to AMD. Now, is the new CEO going to bring a U-turn about? That's the big question. I'd love to see management come up with an actionable plan with multiple timeframes as to what their goals are to turn this thing around.
Agreed. Their management has sucked for too long. It needs to change.
Yes.
Well, maybe the new management will be Trump. We'll see what happens.
That's another thought is, subsidies are looking at it in the same scenario, but with interest in national security for that matter. So it becomes, a vehicle to be able to absolutely make that happen. So many irons in the fire with that one. I'm watching. I've got
we've got to deal with some of the quantum tunneling issues too, right? Once we get to these lower nanometer scales, you have electrons that don't follow our understanding of the law of physics. And that's been a challenge for a lot of chip makers, even Taiwan Semi. So it'll be really interesting to see who can get their arms around it. I will say I'm mildly discouraged by how many R&D people Intel fired over the last year. These were the people they needed to make this happen. But on the other side of it, I would love to see American dynamism bring this company back to the front and center of being able to produce high quality semiconductors. So I'm not going to rule it out. I'm watching eagerly from the sidelines. No position on Intel of yet.
Same. I'm waiting for the right moment.
Yeah, same.
Right.
Although I do have a couple of debit spreads out in the future, but Nothing big, just speculative.
Right on.
I mean, isn't it a little, I mean, I guess I don't really haven't really thought about it in this way, but isn't it a little scary that NVIDIA relies on Taiwan semi? Doesn't it seem like kind of a stretch or not really?
You're just thinking of this now?
Maybe,
Well,
I don't know.
You're preaching to
I
the
was
choir.
thinking that it kind of reminds me of Qualcomm actually, so it was a little deeper than that, but I didn't want to get too far back.
Here's
Right.
what makes it really
Yeah,
funny. Intel
go ahead.
relies on Taiwan semi. AMD relies on Taiwan semi. They all rely on Taiwan. So what your question was getting at, it's actually far more vulnerable than we're even looking at with just NVIDIA. It's like every modern high-scale chip producer that produces these really sophisticated chips relies on Taiwan semi. So yes, that is the big risk. If something was to happen between China and Taiwan or just to the company itself or otherwise, that could be a big problem for the entire industry.
The main metric I'm looking at
Right,
is
Pat, that's why we care that
Right.
whether China invades Taiwan or not.
Sadly, yes.
that's why I'm looking at the metric of who can pivot faster and more efficiently if that does hit the fan. So
Well, but I mean, they're trying to bring that capability here.
right.
So it's just a question of how long is that going to take?
Many, many, many years.
Agreed.
And lots of
Yeah.
red tape that has to be cut through. At least this administration would be more inclined to do that. So maybe we could
Right.
accelerate some of that
Well, right.
process. But it's many, many years.
So it's just on the very edge of Trump's inner circle, as we call it.
Yeah.
Right. I mean, so the whole China thing is really like the next problem.
And it's a problem for the AI narrative too, because you've got companies in China with significantly less resources producing some of the most capable models out there, particularly in the open weight and open source space. No one can compete with Alibaba or DeepSeek or some of these others that have entered the space, even newer, newer components in the space like GLM. I've been experimenting with the open weight models for years, and what's happened over the last 9 months is nothing short of revolutionary. Meanwhile, what's happening in the commercial large weight models that we use via the cloud is just incremental progress overall.
Right. Matt,
That's
you're
a
in
big
Baba
risk.
or short, long, you're something, right?
Oh yeah, I'm in Baba. I've done very, very well in Baba.
Right.
And yeah, I mean China's tough. I kind of broke a rule buying Baba. Like I typically like to buy China when nobody wants to buy China. This time around I went into Baba when people were interested in Baba. I thought this time was different. But typically anytime I try to like buy breakouts and stuff in China, I end up getting my butt kicked. I make my most money in China when you're buying it when nobody wants it.
Agreed.
Yeah, it's been the contrarian play for a while. And now it's starting to turn into something a little different with some of the companies that are showing leadership.
It's
Yeah,
definitely.
I mean, I've got Baba, I've got Baidu. GDS is one that I have been in for a while. That's an under the radar screen, data center Chinese name that I've liked.
And then
Right.
JD.
And yeah, that
Everybody forgets about
think
JD.
I was in JD. Yeah, I don't think I'm in JD right now.
That's one that's always on my radar. And for me, it's my ability to be agile is you're not able to day trade as much as I am. So I love scalping it while it's hot, but when it's dead, I just ignore it. So
I think with JD, what we really need is to see the Chinese consumer re-engage.
yeah,
We really need to resolve that underlying rot in the real estate sector where so much of the Chinese middle class and upper class have all their assets tied up. Because if they feel better about their financial future, they're going to start ordering more product online and JD's really going to run. But we still have a Chinese government that just seems reluctant to do anything other than ring fence the risk and sort of foam the runway.
agreed. Yeah, and
Right.
that goes way deep. That's a big rabbit hole to look into.
Yes.
Right. So, Mayhem, you've been sharing your screen. You want to pull up your main spot and and we'll kind of give you a little shout out
show
here.
people where to find you.
I'll be ready to
Sure.
switch the screen this time on OBS.
All right, there we
Give me a
go.
second here. And let me just line that up. All right.
I mean, it's hard for someone who's everywhere to just pick one spot, right?
It is. And especially if you got multiple monitors.
I've got 8. Nope, 9
Yeah.
just in front of me. Just added a new one recently. And I actually use them all, and it's not all for market related stuff. But for me, having multiple screens helps to control my ability to keep things in mind. Whatever's important is on screen on one of my desktops, and I'm able to quickly shift between. That micro latency can really disrupt executive function and the ability to go through that chain of thinking that you need to make a decision quickly. So for me, multiple screens help to kind of boost executive function.
Absolutely.
Agree 100%. I've got 7. And the only reason I only have 7 is I haven't figured out how to have more than that in my line of sight.
Well, we can talk sometime if you want. I've gotten pretty creative about that.
So right.
I'm definitely interested.
I've got 3 on my main rig that I use because it's faster, and then I had a second rig over here with 4. So I just used a separate computer to do it. But
have you checked out something like Input Leap or Synergy so you can share your keyboard and mouse and control both computers from a common keyboard and mouse?
That I haven't done yet.
I haven't done either. I've got 2 computers that I have running.
We should chat offline. It's a huge productivity booster.
I'll let you guys guess how many screens I got up.
I put better casters on my chair, so I just slide over real quick.
There you go.
So it works for me.
All right, sir. Thank you for showing. Great guess.
Cool. Heck yeah, man.
Thanks for having me.
We got a lot more to talk about.
Yeah, and and everyone remember to like and subscribe. If you,
all right.
If you like this content, we got to remind people we want to help the YouTube algorithm.
All right, like and subscribe.
We want to get this out to more because our hearts are all in the same place. We love helping people, and even our guests do.
100%. That's why I started this journey. Great to be on with you all.
See you guys.
You too. Thanks again. We'll see y'all next week.
Thanks.